Hello, hello, hello. Mic test, mic test, mic test, mic test. Hello, hello, hello. Mic test. Hello, guys, and welcome to the 134th edition of the Trading Opportunities webinar. And we are quite a bit delayed today because I went off tangent. I was studying some stuff completely unrelated to markets and lost track of time there. Anyways, so without increasing the delay, let me just give you a very quick introduction. This is, guys, the weekly market update series called Trading Opportunities webinar. This is conducted every Friday, and the timing is more or less have been the same, 2 p.m. GMT or 7:30 p.m. IST, but today we are an hour and a half late. So in case you want to become part of it next time, this will be the expected time. It has been the case since 133 webinars. Anyway, so the way we proceed in these webinars, I'll discuss the charts of major instruments like Euro USD, Crude Oil, Gold, S&P, and Nifty, as you can see here listed in the sequence. And we'll also look at what was being discussed in the last webinar before proceeding with our current live market charts. Right. Apart from this webinar series, you can also find more of my work by visiting my websites. I have a book, Think with the Markets, available on Amazon's Kindle electronic delivery platform, as well as my course, Complete Guide to Professional Trading with Elliott Wave, is also available. It already has 1,600 plus students in it. You can check that out in case you are a complete beginner. In case you don't want to invest right away and would like to have a quick outlook of some of our free content, then you can check the description of this video, or very soon there will be a link scrolling at the bottom of the screen that contains a free video course, completely free, no registration required. You can check that. Right. It contains basics of Elliott Wave, which is the methodology which I use in my analysis and trading. And of course, here you can check my past track record from 2016 to 2021, where, as you can see, we have kept an much higher than industry standard record, and it's all publicly viable because we are stating all the public webinars as well as YouTube videos here, right? And after that, of course, you already know we have been conducting this weekly webinar series, which you are a part of right now. Right, with that being said, let's now quickly head over and start with our analysis. I actually haven't even checked how many of the past discussions have played out, how they have played out. I think gold and S&P worked out, but other than that, we'll see as we go along. Right. So first of all, let's have a look at the chart of Euro USD, check what was being discussed when we were doing the webinar last time, and see how the market has moved on from there on. So first thing is Euro USD. I have created a long position here. Right. Let me just quickly go and see if I can show the Slack post. Hello, Raghu, and very good afternoon to you. Nice to see you back again in our live webinars. So just wanted to see if I can show Euro USD post. That way we can create a context of how things are progressing. So here is the live Slack group. Let's see. Euro added longs. Yeah, there it is on September 18th. We have kept a long position on since September 18th, and I did more longs on September 25th. So we are still holding longs. The idea is the same as you can see here on screen. Just for the sake of context, I'm playing the last webinar recording, which was the 133rd webinar, and it was conducted on 28th of this month. And as you can see, we had the possibility of ABC continuing as a sideways structure, like a flat, or the second possibility was that it's already complete. In case already complete, it will just go up. In case it's continuing sideways, we will still see this C leg down. So with that being said, we can now head over to our live chart and discuss things over there. So here is the live chart on screen. As I mentioned, I had added longs on 18th, and then added more longs. So currently we are in I think net loss or very near to our average. But overall, it's a wait and watch market. And just to give you a context of the analysis, it is literally the same. We have the wave one here, and let me give you a context from the very beginning. So this is our point of reference. Without going into higher time frame analysis, we believe that from this point of reference, we are seeing an impulsive movement to the upward direction, and impulsive movement means 5 waves up and then a downward movement. And thank you for the confirmation. Of course, I forgot to ask very late, and so I think things are not running as our usual. Thank you, Raghu, for the confirmation about the audio and video, and hello to you, Fond Dylan. Do you what? I think I've heard that name in one of our past webinars. Anyways, nice to have you here. Yes, as we were suggesting that we are thinking of an impulsive continuation. Basically, this is a flat we are expecting. This is the one up, this is the one up, and this is the two either complete here, two either complete here, or two has one leg remaining, or two has one leg remaining, in which case this will be the A, B, and C kind of progression. We don't even know if the B is complete yet, but anyways, my point is here is just to give a rough idea. If it's an ABC continuation, then the C leg down is remaining. So my longs are from a swing perspective. I am mindful of the fact that this market can take a dive in the downward direction, in which case we will have to keep the stop losses much lower, at least lower than 1.10012, whatever this level is on your chart. Keep in mind we are using this data feed. If you are using some other data feed, then the prices will vary a little bit. After all, these are CFD charts. So yes, coming back to the discussion, what we are seeing here is a possible ABC flat here, and it is unclear if this is already complete as a zigzag here, in which case it will just go up, or it is still having one more leg remaining, in which case it will go as per the yellow count. So our yellow count is, let's say, our H1, and this one is, let's say, H2. Both are suggesting swing longs, and with the idea that the market should sustain above 1.10. Right? So 1.10 becomes sort of our invalidation level. Below this market is possibly doing something completely else. And as far as the market sustaining above it, I am already confident that this analysis is playing out, and I'm already long. So that becomes the whole setup. I don't think there is much to add or discuss here. The immediate target becomes 1.1277, although that's just a minor profit booking target. That is, I can take a small position off from here, because personally I think it can go much higher from here. So that is about all for our analysis on Euro USD. I don't think there is much of a point in discussing it. It's clear, straightforward analysis. Otherwise, if you have any doubts, you can just post it in the live chat, obviously. In that case, now let's head over to our next chart of crude oil. Again, before loading up the chart, here is the last webinar's recording. Let's see what we were discussing on the chart of crude oil here very quickly, and then we will proceed with the live chart from there on. Let's make it 1080p so that we can have a good quality view. So in our last discussion on crude oil, I suggested that we are expecting an ABC, at least 3-wave up movement. And the idea was that once this yellow trend line is broken to the downside, we can expect correction, which can take this market to 69.27 to 68.43, this white support zone basically. And as we'll see, this market has actually gone into the white support zone, and one more up leg is now expected. So basically, let me draw on top of this recording. This is what we were expecting. Let's see the live chart now. So here it is 68.43 level, the downside of this white support zone. Market is already at it. So our hypothesis so far is playing out. This is what we expect. I have not entered longs. I should have entered shorts at the break of this, but I was already having maximum exposure. I am still having long position on gold, S&P, and euros. So did not want to add more to our risk. That's why this position was not taken. Otherwise, it would have given us at least something on the short side. So anyways, coming back to the discussion, what we are expecting now is the possibility that this market can give us one more leg, and in the upward direction, that would make this market progress as an A up, B down, and then C up. Now keep in mind that's just an expected progression, and the problem here I'm seeing is that this market has gone down a little bit too fast for wave C of wave B. Now basically just what I'm trying to say is that for a correction, this market is too fast. That's not generally what you want to see in a corrective structure. So that brings up a secondary scenario. Let's just discuss first things as they are on screen. H1 is suggesting that this market should go up, and we are not interested in any longs unless this market goes above 72.34. That's the case for now. However, as I mentioned, I'm not very satisfied with this wave B's fast movement. So my alternate view now becomes that this could be the A here, this could be the B complete, this could be the C. Now keep in mind, wave C only has the requirement to go and take out the high of wave A. So this high, whatever this level is already taken out, right? Since it's already taken out, this can be considered as the end of wave C, which basically suggests that this whole thing, let's just make it in yellow, ABC is already complete. Although it looks very uncomfortable, but believe it or not, in live market, things are not supposed to be comfortable. They can just take whatever path suits the money flow. Anyways, coming back to our discussion, what I'm basically saying is that our H2 is suggestive that we can just see straight down movement. We don't have a confirmation or anything for this. Let's say below 67, I'll be very interested in taking shorts. Overall, my bias is bullish. Sorry, bearish. So I am not gonna be entering longs, as I said, unless we see move above 72.343, because the swing perspective on this market is still a little bit bearish in my personal understanding of this counter, right? So long story short, we look for shorts below 67, longs above 72.34, and we have discussed both weird looking scenario, second scenario, a little bit weird looking, and the major theme, which was the first scenario. And of course, this market can take some other possible scenarios. The two I discussed are the main themes. Of course, the market can go off tangent and do something off the charts. I mean, not of the charts, I mean, off the books or of the general theme. Some ideas I have, but that kind of goes against our limited time here. And the theory of these public webinars has always been to discuss limited views. And those interested or serious can always join in our live Slack group. So yes, as I said, that's my view. If you guys have any doubts or questions regarding what we discussed on chart, right, let me know in the live chat. And of course, is my flow good enough? Am I going too fast, too slow? Give me a feedback here as well, if you can. Right. With that being said, let's now head over to our chart of gold XAU USD, and had a series of longs here. We'll discuss all that. Let's just first check what was being discussed in the last webinar on gold. So here we are on the recording for last webinar of gold. Let's see what was being said. Let's see if it can load up. It's taking a little bit of time here. So is the stream still going live? Let me check at my end as well. Yes, the delay is only on YouTube's end. So yes, so this is the recording from our last webinar session where we discussed the chart of gold on 20th of this month, and the view was that this market is bullish. I already had longs quite quite a long time. I've been carrying longs on this counter, and let's see if something else was discussed. Actually, we are just expecting upside here, but this is a long discussion. Starts around 16, goes till 26. So I'll have to check a little bit more of what was being said on this in this webinar. More or less the same. I'm looking for upside. Yes. So there was a possibility that this market will go possibly sideways before going up. And for that, I had trailed my stop loss, I believe. I mean, not I don't believe, I know, I should say. And our trail was not hit. We'll also look at the live trade, etc. Yeah, and that's it. That's what I wanted to get at. The 1 hour chart, which was suggesting that the wave 4 is possibly over, and this is the fifth leg up. So anyways, the point is we are expecting upside movement. In case you are more interested in the last webinars analysis, you can just check it by visiting the YouTube channel and clicking on live webinars or live section actually, and 133. So I just wanted to give you a rough idea, and without wasting any time, let's head over to live chart now. So market was somewhere here when we last discussed it, around 2620, roughly speaking. because that's on 28th September. And since we were long and I've been trailing and trailing, this market has kept going up. Currently, my trail is situated for the partial position around, let's very quickly check on the live posts. So here are the posts on gold. Booked profits on majority position, and stop loss has been trailed to 26.25. And previously, I had also booked some profits before this. We have multiple positions on, so I have booked 2 times. This was the second one. Let's see if we can get to the booked profits on part positions, right? September 24th. So on September 24th, I booked some profits around the price of 2651, and then I booked a majority profit around the price of 2646. So around 2650, we have booked majority profits, and some position, as I said, is still on with the trail currently set at 2625, right? I can also take this position off, but what's the point if our analysis is correct and this is a long-term strong bull movement? Then it's better to wait and test our luck rather than be out of the market. Now, coming back to the analysis, what we do see here is a impulsive continuation. I have made some changes in the count, which we'll discuss very quickly in this webinar. One, two, and then yes. So this is our wave one up, two down. Let me just quickly label things before explaining them. And I believe that's the nested formation starting from here. So let's call this dot one, dot two, and then 1, 2, 3, 4, 5. That will make it 3. That will make it a 4, and this will make it a dot 3. Right. So now what I'm talking about here is the possibility that this market is moving up in an impulsive formation. In an impulsive formation, we have a wave 1, we have a wave 2, a 3, a 4, and a 5. So if we compare it with this understanding, we can see that the 1 is here. Let's compare the dot degrees. And the 2 is here. And we are currently moving within this dot 3. Right? And because of the Elliott waves fractal nature, this wave 3 itself has 5 waves inside of it, which can be labeled as a what you call a Roman 1, 2, 3, 4, so on and so forth. And let's just check that on this live chart. And once this Roman fifth is complete, we can say that this dot 3 degree is also complete. So what we are seeing over here is a possible Roman 1 and a 2, and followed by a 3 here and a 4 here. Right, so that's why I'm expecting one leg up in this market with the current stop loss, trailing stop loss at 2625. And one more point to note here is that this market can actually go to 2600 or just 2626. So these are the two supports, 2626 somewhere here and 2600. Let's just mark them, type them out so that we can remember them. So these are the two support levels this market can go up to. My current trailing stop loss is below the first support level, which is also the fib retracement level. And if this market is super strong and extremely bullish, then either it will just go up from here, or it will go, I mean, up from the current level, or it will go to 2626. Going to 2600 opens up a lot of different possibilities, and that could mean that this market may perhaps be doing something else. So that is an issue, or that can be an issue. So one second. So this is one of the analysis which worked out so far as per our discussion. I think we have discussed the major points that we wanted to discuss on this chart. And if you guys have any doubts or questions, you can just ask me in the live chat. I'll see. Well, incoming target is at 2740. That's on the higher time frame analysis. From a shorter time frame analysis, some other targets are possible. Most convenient will be to just draw a trend line here and draw a parallel from here and take the target here from the current price point 2705. So 2700 followed by higher targets are possible on this counter of gold. Strategy, as I just mentioned, I'm just keeping my trail at 2626. For those interested in new longs, I would suggest to look for longs only about 2680, and that too we will have to analyze the position at that point in time. It's not straightforward long anymore. I don't think there is much to add here. I'll just push in the targets here. Plus levels 2705 or higher levels is the expected upside potential for this market. Keeping this as our trail for current longs. Right. That's about it for our discussion on gold. I'll just now move over to our chart of S&P as I do not see any doubts or queries in the live chat. And obviously, guys, if you are enjoying the content, do not forget to hit the like button and share this content so that we reach the right audience for our content and can get more views from the said right audience. Your contribution is definitely required, keeping in mind that we still have not hit our initial target of 1000 plus consistent views. So I will highly appreciate if you guys can do your part and share this content as much as you can on your social media and your Slack, WhatsApp, Telegram, Discord groups of traders, or whatever is possible from your end, email or whatever you guys use to remain connected with your friends and family. So now let's head over to our chart of S&P. Where is that? So YouTube certainly is taking some time to load things up here. Okay, so here's the chart of S&P, and we are discussing something. So this is the recording from our last webinar, which was conducted live on 28th of this month. And what we have here is the possibility of further upside movement on S&P. And we are expecting that the fifth wave circle degree is still continuing. So I think the basic theme was more upside can be seen. If the market goes below the red trend line, then it can be a sign of caution. But other than that, more upside can be seen. Yes, and if it goes below the red trend line, then we have also discussed the possible downside or bearish scenarios. That was the main discussion in our last webinar. But as you can see, this conclusion was that both scenarios were eventually pointing in the our direction. So basically, swing perspective, we were looking for long plays on S&P. The price at that point in time was 5705. Here's live chart of S&P is 500. The price is 5760. So we were somewhere here when we discuss this market, right? So the market has moved up, right? And it is not our standard analysis. I have done some changes to the count of this market. Let's discuss those because that's what important. So here's the point of reference for this market. Right. So from this point of reference around the price level of 5389, what we do seem to be having is a possible impulse heading in the upward direction. Now what I have done is not the very conventional way of counting things or doing things here. We have taken this as a 1 up, 2 down, and then nested formation, basically suggesting that we are seeing a series of ones and series of twos that can be resolved in many different other ways, but this is what I believe is the best count for now. So what we have is a series of 1 to 1.1.2 Roman 1 Roman 2, and we expect this to be Roman 3. Now currently I do have some longs on this counter, and this whole idea collapses if this market goes below this price level of 5722. It just becomes invalidated. Although my primary bias is still bullish, but at that point I probably will either take out the position or at least reduce my position size, because this market, while it's very nice to have a nested formation or whatever complex count I can come up with, if the market is not going up, it's just not going up. And I personally feel it has given a lot of congestion and not shown the upward move. So basically a congestion or sideways movement is a sign of either accumulation or distribution. So if it was accumulation, we want to see the upward flight. Otherwise, we will have to consider the possibility of this being a distribution, this whole thing, and this minor leg up to be a false break. Anyways, not getting into too much price action analysis. As long as the bias remains bullish, I am holding longs. 5722 is a definite level to watch out. If somebody has longs or is interested in long ideas, we just don't want to see the market go below it at all. On upside, there is no limitation. We are in Roman 3 of dot 3 degree, which is of normal 3 degree. So we have multiple upward legs remaining in this market. So as per this nomenclature, we don't have anything to worry as far as upside targets are considered or supposed, right? So we can just have a quick look as well at some of the upside targets. Just a moment here. This immediate targets I've already marked with the alerts. So immediate targets are incoming at 5813, followed by something above it, which was 5900. So these are the immediate targets. If this progression continues as per our analysis, and 5722 is our invalidation level, basically suggesting that if things don't go our way, this is where we really need to reconsider or size down, or at least if not that's not possible, then get out. Right. So far so good, and this market has so far done as expected. So I'll take a few moments here. If you guys have any doubts or questions, you can just point them in the live chat. And while I can see a lot of people here, I don't see much interaction in the live audience. What's up with that? 1 second. Anyways, so with that being said, let's now head over to our last two charts, Nifty followed by the chart of BTC. Again, before we move to these charts, I'd like to take a few moments and request to you guys that if you are enjoying this content, make sure you share this content with your friends, colleagues, or in your trading groups, whatever you are using, Facebook, Twitter, Discord, Slack, or even if you are using Reddit in one way or another, do not forget to share it with your connections of traders or investors. Right? We definitely want your continued support to reach our required target of 1,000 plus views on these webinars. So kindly do your part. That being said, let's head over and very quickly check. This is the recording from our webinar connected live on 20th of this month, and let's see what was being said on the chart of Nifty somewhere here. Let's wait a few moments for it to load up. So here is the recording from our last webinar, and here we are discussing the chart of Nifty 50, and our view was basically that either the fifth wave is complete as an ending diagonal, because this did look like a diagonal at that point in time, and if it was the case, we would have seen a straight down movement and the alert would have been this trend line. You can check more of this analysis by checking this recording. However, since the primary view was bullish, and as long as the market does not prove otherwise, we continue to remain bullish. So hence the main view was that we consider longs unless the market really does give us a sell trigger. So main hypothesis, as you can see, H1 was in the upward direction. S2 was that we can see some downward move before the market goes up after this correction. So long story short, we had a swing long perspective. The market at that point in time closed at 25820, right? So there may be some other minor points here. We can't just spend too much time, but let me just check if there's something vital. And we are looking for long above 25,880. I think that's what I'm mentioning most likely. Anyways, that was our quick discussion on Nifty back when we were discussing it last week. 25,820. Now let's look at the actual live chart, or the markets are close to the currently available chart. So from 25,820, which was, I believe, somewhere here, this market has gone up to 26,268, which is about 400 plus points. So our bullish count held. The bearish outlook was only going to become active if the red trend line was taken out. The red trend line was never taken out, as you can see in this live chart, or current chart, I should say, most updated chart. And since it was never taken out, our bias of bullishness remains active. I'm not very in alignment with this count. I think this can be counted better with the wave 3 considered as a bigger wave rather than the smaller circled green count. But overall, I have checked it. It doesn't really affect the main theme, which I'm going to discuss now. So in the main theme, what I'm supposing here is that we are still seeing an impulse in play, right? Now, one second, let me just quickly give you a rough idea. The theme can also be changed, that this one is fine here, two is fine. And instead of this three being here, it is maybe just still continuing up. So that will suggest that this whole complex internal is a fractal of a fractal of a fractal, right? And this market is still 2 3 legs up remaining. Now, coming to the current outlook, what we do have here is going with the theme that wave 5 is the one which is extending instead of the wave 3 in this case. Although I should really check if 3 is not the shortest, now that we are talking about 5 as the standard. So anyways, it is not. So the theme now becomes that if this is a circle 1 and this is a circle 2 and this is a circle 3 yellow degree, then we want the market to sustain above 26,120. That as long as the market sustains above 26,120, that's one sign of bullishness. Second idea, or second main theme of bullishness will be that this market remains above the red channel, this red channel. So while this yellow count will become invalid at that point, if the market sustains above the red channel, it still itself suggests that only the count has changed, but the main theme remains the same, right? One second. So I was mentioning that first support 26,120 should be held. If not, then this red channel should be held for continued swing long perspective on this counter, right? Although I'm seeing some weakness on Bank Nifty, so that may suggest that 26,120 will soon be tested, and that remains to be seen. So what's the setup in this case? We don't have to do much of anything. We can just place an alert around 26,250. If the market goes above it, we'll consider short term or intraday longs, otherwise not, right? Because as I said, there are multiple possibilities here. The one I have projected is just it's not even the highest likely scenario, because at this point the whole thing is becoming a little bit complex. So I don't want to delve too much into it or too much in this stuff right now. So long story short, stock wise, we'll be more interested in sectors and stock related themes. I've already covered some of the stock related themes in our private Slack group. Specifically, we have been able to capture the rallies in Bajaj Auto since 9800. Currently is around I think 12,800 something, followed by TVS Motor and some other stocks and some other stocks from other sectors. For instance, today itself, we had already predicted the move up in Sun Pharma. But anyways, I'm not going into too much detail. I think we had a 100% winning weeks, 2 3 weeks. Last consecutive 2 3 weeks have been 100% winning weeks, both in regards of stocks, indexes, and commodities. So that's something for our Slack group members to enjoy. And yes, of course, if you are interested, you can request more details by following the link in the description. Right. That's about it for our discussion on Nifty. Long only above the price level of 26,240, and immediate target if the market goes up is coming around 26,400. That's based on our trend line analysis. Right. So that's about it for Nifty. With that being said, let's now head over to our last chart of BTC, which has actually triggered the short-term long count or short-term bullish view. So we didn't have a very detailed discussion on Bitcoin in our last webinar, but still I'll just quickly show you the recording from our last webinar, which was discussed on 20th of this month. Our view was that above 65,228, we can look for some short-term long opportunities, because the main view was if the wave 4 is complete here, this market about 25,228 can just take off from here. That is, it can just take an upward flight from here. But that was one of the two themes we had discussed in the last webinar. Let's look at the current chart and see the current themes using the live price action. So following up with our last discussion, as I said, either the 4 is complete, in which case about 65,000, whatever this level is, 65 something something, 65,200 something, we look for longs. So the market has already gone above it. So one theme is that the 4 is complete here and this market is going to continue going higher and higher, in which case it's already a long. As we discussed, the long has already been triggered, and we were not very interested in swing longs, only short-term intraday longs. Reason for that was, in case this wave 4 is not complete here and is just continuing sideways, then this could be taken as a complex count continuation. I mean, this is just one of the many things it could be doing, but you get the idea. That's roughly what we are going to be thinking. If this market is still in a complex count, this will be the main theme. Now, when will this theme get invalidated? Well, completely it can not be invalidated very quickly, but we can say with some certainty that it has some strength once we see a move higher than 69,700, right? As long as we are below it, all the trades, while are bullish, they are not super bullish, and we do not have a proper confirmation for them. So for instance, our alert was here, got triggered, and we would have taken some scalps if I was trading this market, but that would have been only for a few hundred points max, right? I'm not hoping for 1,000 point move or anything. From here on, above 69,700, yes, then we can expect something bigger possibly. So keep in mind, these are the possible scenarios. This is the major theme I have laid out here. This market can actually do couple more other things. I've just laid out the simplest looking structure here. So accordingly, uh, that's our take here. Right? No major swing longs below 69,700, because the idea for complex continuation remains active. And actually, I think that's about it for this discussion. If you guys enjoyed the content, as I do tell you guys in every other webinar, and I've already told you twice in this one, do not forget to hit like, and much more importantly, share the content. That way, we can reach the right audience, which is most important, and get 1,000+ consistent views possibly as soon as possible. That will also allow me to continuously keep updating the markets and possibly add more markets for you guys. So thank you for staying till the end, those who did, and I'll see you guys in the next one. Take care.